Thank you. That was awesome. I texted Julie. I texted you on the side, natural of both you, and just hearing the stories of vulnerability, what you guys went through. It was really unique to hear that. We don't get to hear a lot of that stuff, and the perspective is real. It's hard to remember what you deal with from the past, and so every once in a while, when you sit down and reflect, and it comes from the heart, you feel it. So I hope you guys felt it. I felt it for sure. Appreciate you ladies sharing the journey, the trials, the tribulations, and the success. Some of the numbers Cindy was throwing out there. She's like, yeah, when I was running the branch, $1 billion. It's just so like it just comes off the top of her tongue because it was just normal for them. It was just normal for her. That's how elite she is. That's how dialed in she is. So just to hear those numbers being thrown out there, that's a big deal. Those are some big, big numbers. And so we appreciate you. If you haven't connected with her, I highly recommend it. With that being said, I'm in the trenches every single day. And we had a clip not long ago that we did on our podcast, the Broker Power Up with Tommy and myself. And I talked about variable income. And we're seeing it more and more and more. And I've seen people comment on it. They've asked me questions. I've had people reach out. So today, I am going to go ahead and do a training with you on variable income. This is a loan that we actually wrote. So this is a client where underwriters pushed back. It's a real scenario, real pay stubs. I had to redact a couple things, obviously. But this loan was going to be denied out. Underwriters actually denied the loan out initially. And then we came back and said, hey, we disagree. And here's how. So why do I bring this up to you? Reason I bring it up to you is there's been situations where I'm sure you've gone in, they've come back as variable income, and you've said to yourself, I feel like there's a solution, but I can't figure out what the solution is. Then what happens? Let's just be real. You get pissed, you get frustrated, you call the underwriter, you're screaming at the underwriter, you're screaming at the team leader, you're telling people like, this isn't going to work, you suck, and all this stuff that is not proactive. You're being reactive or being emotional. And by the way, I get the emotion. I'm also aware that it's easier for me and for you to look at somebody else's loan versus your own loan. When the emotions run too high, it's hard to make those decisions. So variable income is something that's been brought up more and more over the last, I would say, roughly 24 months, about 2 years. So what is it? Here's variable income in a nutshell. Client says, I get paid hourly. We get the pay stubs for the hourly rate. We look at the pay stubs. We look at the client's year-to-date income. We see their hourly rate. And their year-to-date income does not reflect what their hourly rate is at where they should be on a monthly basis. So just to give you a perfect example for that and using some easy numbers, if a client is paid $20 an hour, you would multiply that number times 40. That's 40 hours in a week. And then you would multiply that by 52 weeks in a year. That would indicate that your consumer needs to be on pace to make $41,600 for the year. And so if you divide that number by 12, that correlates to $3,466 on any given month. So that means if you're 6 months in, so if you have a pay stub all the way through June, your client needs to be on pace or close to being at $20,800 of base income. That would mean that their $20 an hour is correct when it comes to actually, hey, they are on pace to make this amount. They do get 40 hours a week. They do get $20 an hour. We're at the end of June. 6 total months have gone by. They're on pace to make that number. So you don't have a variable income issue. Now, if at 6 months, that number is supposed to be $20,800, but you're at $16,000, that's a red flag. Now it's what's going on right now. What happens next? So some of the lenders, most lenders have a variance. That variance of what's allowable is between 5 and 10%. So for every $100 of income, you have basically $5 to $10 to work with when it comes to wiggle room. So what do you actually need? What do you need? What you need up front is simple to do this calculation. I need the most recent year-to-date pay stub. On top of the W-2s, don't worry about all of that. Standard is regular. You also need your year-end 2024 pay stub, the most recent one from 2024, so you can get the most income possible. And you also need the year-end pay stub for 2023. So here is our real scenario that you are looking at right here. Here's our client. So what do you have to do? The first thing is each pay stub, I'm going to break everything down. I'm going to break it down by base pay, overtime, bonus, commission, and other income. So here's where a lot of people make mistakes. Base pay is not just what you see on here. What you see on here is regular pay. I know it says salary. Client was not absolutely hourly, unfortunately, in this situation. So you see it says regular pay. That's not the only base pay. You can also look at things such as personal day, paid family leave. You start to dial into all these, a floating holiday, a regular holiday. These are all included as the base pay. So I got to add all this stuff up and then make my base pay separate. And so if I have a question, if I think one might be base pay, then you got to get a written verification. That's a separate conversation, but usually it's pretty easy to address. So number one, base pay. Base pay is not just regular pay. It's not just hourly rate. It's holidays. It's paid time off. It's all of those little things that you see on a pay stub you add to your base pay. Next, break down the overtime separately, break down the commission separately. And then if there's some things that are other, such as per diem interest, reimbursements, put that in the other column. Yes, I am old school. I do it. I write it out. That's just a personal preference. You can put it in Excel, put it in the notes, whatever the case is that you want to do. You're going to do this for your year-to-date pay stub. You're going to do this for your year-end pay stub of 2024. You're going to do this for your year-end pay stub of 2023. You're going to break it out perfectly. Now, articulating yourself to the underwriter, my friends, this is a real email that we sent out, and I want to read it to you out loud. There's a lot of context here, but it's not that difficult when you start trying. Break out all you need. Again, year-to-date pay stub, year-end 2024, year-end pay stub 2023. You break it down by base pay, overtime, bonus, commission, and other if you need it. In this specific loan, we had the loan suspended, and my loan officer and myself, we felt like we had a lot of wiggle room here. And so we made the argument, and here's the argument that we made. Hello, team. We have some discrepancies here. Going to break this down the best I can. We don't even want to use the overtime income. So I always try to be conservative first. Can I make this work without asking the underwriters or the lender to use all this extra income? Let's just use the hourly rate. That's what I'm trying to get to. I break it down. I said client made $21 an hour in 2024. The year-end pay stub that we have ended 12/14/2024. We're still missing 2 weeks of pay that I don't even need to use this. What the client should have made, based on the client's $21 an hour, we took 21 times 52 weeks times 40 hours a week. They should be making $43,680 for all the entire year of 2024. The pay stub that I had when I broke down the pay, and I didn't just look at base pay, was $41,406.12. And here's what the underwriter missed. So if you look, the base pay for the client was only $36,868, meaning that it was off roughly $7,000 on the $43,000 that the underwriter anticipated it to be. But when we add all the other extra things, I add the holiday pay for $1,500. We add the paid time off for $2,800. We add the cultural celebration for $168. And then my argument was, can you add back the 2 weeks that are missing on this pay stub? You can clearly add this back. Client worked for those 2 weeks. We're barely off. When I broke that logic down, it was very easy for the underwriter to see that they were on pace in 2024 for the base pay. They weren't off. Now, here's where we got really creative. In 2025, our client actually received a $1.49 raise, which means that base pay number is going to now look different. And as we broke down the base pay for this year, we do it line by line. Here's the client's new rate. $22.49 times 52 weeks times 40 hours means that the client this year, 2025, needs to be on pace to make $46,779.20. Based on where this loan was at, the pay period ended June 28th. So the 6 total months that we had, client has already made $23,042 in base pay. So I broke all of this down for the underwriter. We went line by line. We explained where they're at. We helped pull more base income. We said, hey, I think we missed this. I think we missed this. I think we missed this. I said, the client is on pace to be within 1.5% of what she needs to be making. Are you, as the lender, considering this variable income? And if we have zero wiggle room, we're good. We understand, and we will move the loan accordingly. That's not me saying we're going to strip the loan. Don't be aggressive. Be very cautious with how you say that stuff. You don't want to kill locks. It hurts the relationship. It hurts the lender you're using. I don't want to move the loan. But hey, if we have to, we have to. And so I tried to make my argument. So then I say, thank you, team. Here's the part that a lot of loan officers miss, okay? We are not perfect. And if you think you are, come on, stop. Thank you, team. Please let us know if we are missing something. I am aware we are not perfect. We just feel strongly on this one. Even if you as the lender are not going to budge, we understand. We would just like to know. That's okay. I know we're not perfect. If I'm not looking at it right, if you have a different angle, if I missed something, if maybe there's a garnishment, you have to remove wages and I missed it. Whatever it is, I'm basically saying, hey, there's a small window, if I'm not right, for you to come back, and I'm opening up the dialogue. I'm not shutting it down and saying, underwriter, you're wrong. I'm saying, hey, we feel strongly. That doesn't mean that I know everything. There could be something missed, but now I'm articulating myself. And then voila, would you know it? The next morning, hi, thanks for the detailed response on this. My boss and I discussed and will be okay to use the base pay calculation on this. That would put the base income at $3,898.27 a month. The OT income stands at $22.20 per month. We got it. We didn't have to move the loan. We didn't have to yell at underwriters. We didn't have to scream at anybody. We had to just articulate ourselves and break it down and just show our math. Don't always be frustrated. We have to show, well, your underwriter should know how to do it. Look, that could be true, but you know what's even better? You should know how to do it. You should know how to do it. You're the one that gets paid the most on the loan. So why not learn how the calculation works? Why not learn how to show your work? Look, I get it. We got ChatGPT. We got all these resources now. But look, when I was in school, I'll never forget. Never forget. You're going through. You're doing math. Show your work. Show us how you got there. Every once in a while, you got to do that. And don't be afraid to do it. You don't want the loan to be denied out, but you also don't want to move the loan if you don't have to. Put in the extra work. Give yourself the extra opportunity. And I wanted to share this win with the community. It was a huge, huge win for us. And there's a lot of chances for you to continue to propel yourself forward and improve your craft. Part of it is learning how to do income. I've spent many years learning income, worked with pretty much just had to work with a lot of the heavy investors back in the day. So income is right up my alley. I love it. I'm obsessed with it. And there's opportunities for you to help your consumers. Just do it the right way. Articulate yourself the right way. Don't burn bridges. Please don't. You and the underwriter have a common ground. So that is our community pulse. We're here to continue to give you back love, give you back support, teach you how to improve your business, tell you incredible stories about the future, help protect you in the future, and just make you cognizant about what's coming next. We appreciate you all. We're grateful for everything. We got a lot more to do. Be ready for Fuse. This thing is on pace to sell out, is what it looks like right now. And we're earlier than ever. We cannot wait to help propel you forward when it comes to your business. We appreciate you. Take care. Until next time.